Data out for the euro area today. As 2014 comes to a close, let's see how the markets are looking. And over to Russia and their interest rate. It's the biggest rise since 1998. Joining me to look at this data is Jasper Lawler, market analyst with CMC Markets. Thanks for joining me, Jasper. In euro area data, markets composite flash PMI rose to 51.7 from a 16-month low of 51.1. Is it indicating that eurozone businesses are ending 2014 in slightly better shape?
That's right. It's definitely better shape than we've seen in recent months, in which we've seen decline after decline, and it's good to see that turn into positive territory over the month. But still, the numbers are showing and implying weak, possibly even negative growth for the eurozone. So the numbers, while positive, have to be taken with a grain of salt. The eurozone still in a fair degree of trouble. And should these kind of numbers, or even this slow pace of increase, continue, then it's going to need to spur further actions from European governments to enact reforms, and perhaps even the European Central Banks to increase their stimulus program.
Eurozone trade surplus increased to 24 billion euro in October of 2014, driven by higher exports. It is the highest surplus on record. So what can we attribute to such a high surplus?
I think certainly in part, again, the ECB policy to weaken the euro, or at least indirectly to weaken the euro, is taking effect. Obviously, a lower euro makes exports relatively cheaper abroad, while imports become relatively more expensive to the EU countries. So certainly slanting the balance in favour of the exports. And then, of course, oil prices have been on a massive decline, and the EU are importers of oil for the most part, and so that cost of a major import has come down, again putting kind of pressure on the imports and triggering this large surplus.
In a move to stabilize the ruble, the Central Bank of Russia has raised the interest rate to 17%, yet economic growth is falling, and along with it the value of crude oil. What has been the immediate reaction of the markets?
Well, the immediate reaction was a large strengthening in the ruble, almost eclipsing the prior day's losses, which had seen an unprecedented 9% fall in the value of the currency, the kind of thing that you only really typically see during a currency crisis. But unfortunately, the central bank have been undone by market forces. As you alluded to, oil prices have come down again today, and they've brought down the Russian ruble along with them, and the Russian ruble is now facing new all-time lows, with the US dollar-ruble currency pair hitting new all-time highs above 65.
Market analyst Jasper Lawler with me there. You've been watching Dukascopy TV. Thanks for tuning in, and remember to click back for regular updates and exclusive interviews. Bye for now.